Right at the heart of the U.S. economy, there's an institution with almost unbelievable power. An institution that can, literally create money out of thin air, move trillions of dollars around the globe every single day, and shape the financial destiny of every one of us. We're talking, of course, about the Federal Reserve. But behind that official story of keeping the economy stable, there's a century-long battle for control. And tonight, we're going to pull back the curtain and find out who's really pulling the strings.
So that's the big question, isn't it? Who is really in charge? I mean, the easy answer is, the president or Congress. But what if I told you the real power rests with a tiny group of unelected governors working inside a kind of fortress of financial secrecy? The truth is, it's way more complicated and honestly way more interesting than you'd think.
Any good investigation has to start with the official story, the version they want you to hear. So let's begin there. Let's take a look at the public face of the Federal Reserve, the one you'd find in a high school textbook.
So, before 1913, the United States was basically the financial Wild West. Seriously, bank runs were a common thing, and these devastating panics, like the massive one back in 1907, could just wipe people out overnight. The whole system was pure chaos. So in 1913, the Federal Reserve was created to bring some order to the madness, to try and tame the beast of American finance.
Now, on paper, the Fed's job description, what they call its dual mandate, sounds pretty noble, pretty straightforward. The goal is to keep people working and keep prices stable. It's supposed to be this steady guardian, right? The lender of last resort that steps in when everything hits the fan. At least, that's the official story they tell us.
Okay, but here is where our investigation really starts to get interesting. We're moving past the official story now, and we're going to look at the Fed's true nature. It is an absolutely immense and uniquely independent power.
And here it is, our first key piece of evidence. And it's a confession, really, hidden in plain sight right on the Fed's own website. Just think about that for a second. The decisions that affect your mortgage rate, your car loan, the value of your savings, none of it needs a sign-off from anyone you've ever voted for. This insulation from politics is completely intentional. It's designed to let them make tough calls without getting caught up in all the political drama.
To really get a sense of the Fed's power, just look at this number, $5 trillion. That is how much money moves through its payment system, Fedwire, every single day. It is the circulatory system of American finance, and the Fed is the heart, pumping all of it. Its control isn't just big, it's absolute and it's instantaneous.
So here's the really crucial part. The Fed isn't just independent in its decisions, it's financially independent too. It doesn't go to Congress for a budget, it funds itself. This makes it this incredibly powerful entity, operating on a level that most people just can't even wrap their heads around. It's like an independent kingdom right in the middle of our own government. And inside this kingdom, a secret war is being waged.
So now we peel back another layer, and what we find is this hidden conflict. This isn't a war fought with soldiers and tanks, but with ideas. It's a century-old economic war, a battle for the very soul of the Federal Reserve, and believe me, its outcome determines the fate of our economy.
Okay, so on one side, you've got the Keynesian school of thought. These guys see themselves as economic firefighters. When a crisis breaks out, they believe the Fed has to rush in with giant hoses of cash, slashing interest rates, printing money, bailing out the whole system to stop the collapse. But on the other side, you've got the Austrian school, and they argue the Fed is actually the arsonist who started the fire in the first place by making credit way too cheap and creating these massive bubbles. For them, a recession is the painful but totally necessary cure, and any intervention just makes the next fire even bigger.
And this philosophical war, it isn't just some academic debate club. Oh no. In 2008, it exploded right out into the open. It became the ultimate battleground for control of the entire global economy, the financial crisis.
When the 2008 crisis hit, the Keynesians absolutely won the day. The Fed's response was a full-scale, all-out intervention. They slammed interest rates down to zero. They launched something called quantitative easing, which is a fancy way of saying they created trillions of dollars from nothing to buy up assets. They bailed out the big failing banks. It was without a doubt the most aggressive financial rescue mission in modern history, all designed to stop the bleeding. But the Austrians, they watched all this happen in absolute horror. They argued that bailing out reckless banks just creates what's called moral hazard. Basically, if you know you're going to get saved no matter what, why not take crazy risks? They claimed that propping up these failing companies just delayed a real recovery, and that all this easy money was just pumping up the next, even bigger bubble. And the debate over who was right, well, it's still raging today.
And that brings us right to this moment, right now.
where this ideological war has just exploded into a direct political assault on the Fed's very existence as an independent institution.
The threat here is becoming, frankly, terrifyingly real. There's this legal theory being tested that could let a future president, let's say a re-elected Donald Trump, do something that was once unthinkable: fire a sitting Federal Reserve governor, like Lisa Cook, just because they want to. This for-cause protection that has shielded the Fed from politics for over a century, it is literally on trial right now at the Supreme Court.
During the arguments, Justice Kavanaugh just cut right to the chase with this chilling warning. He laid out the catastrophic domino effect. If one president can fire a Fed governor for purely political reasons, then every president is going to do it. The Fed would just become another political pawn, and that independence we've been talking about, it would be gone forever.
But the attack on the status quo isn't just coming from the outside. No, a new and pretty radical challenge is now starting to emerge from inside the Federal Reserve itself.
They're calling it the Mar-a-Lago Accord, and it's basically a bombshell proposal coming from inside the Fed's own walls. One of the governors, a guy named Stephen Murin, is pushing this pretty radical idea to deliberately weaken the US dollar to make American exports cheap again and try to bring manufacturing jobs back home. This isn't just a policy debate anymore. This is like a revolution being plotted inside the Fed's boardroom.
So, where does all this leave us? We've peeled back the layers of the onion, we've uncovered the secret wars, we've exposed the political attacks, and now our investigation arrives at its final and most critical question. The Federal Reserve was designed to be independent, a group of experts standing above all the political chaos. But after everything we've seen, you have to ask yourself, is that independence just an illusion? And if those walls that protect the Fed from politics finally crumble, who will be left in control of all that money? The people or the politicians? Maybe the real truth is, it was never really independent at all. Now you think about it.